From Bloomberg World Headquarters in New York to our TV and radio audiences worldwide, I'm David Westin. Welcome to Balance of Power, where the world of politics meets the world of business. On the brief today, Michael McKee on what the U.S. data out this morning tell us about the state of the economy. From Capitol Hill, Kevin Cirilli on elections today in Mississippi and Kentucky. And from Washington, Jesse Westbrook on the SEC delaying MiFID for another 3 years. So, Mike, let's start with you. We got several pieces of data out this morning, the trade balance numbers, non-manufacturing index from ISM. What's most important to you?
Well, a couple of things. The market is hungry for good news and got what it wanted in a turnaround in business expectations for service industries. The ISM non-manufacturing index, which is actually quite broad, includes things like agriculture, but is taken as a proxy for services, improves to 54.7. Don't pay attention to the number so much as the direction, because that index had been heading down, and it now shows a rebound in confidence going forward with new orders and hiring higher on the month. The worrisome aspect of it is the trade war continues. We saw a big drop in export orders and import orders as well.
Yeah, the trade with China has really dropped off. There's no question about it. At the same time, we have reports now that maybe there might even be a partial rollback of some of the tariffs. Might that turn that around?
Well, we don't know exactly where we are on this because it all happens behind closed doors. But the reporting has been that the Chinese are looking for the president to roll back the tariffs he imposed in September and cancel the tariffs that he's going to impose, in theory, in December. There's another story that says the White House is considering that. We don't know yet whether they will actually make that deal.
Yeah, and what the White House would want in return if they did do that.
Right.
They might want more out of the Chinese as a practical. Okay, many thanks to Michael McKee joining us here in New York. And now let's go to Kevin Cirilli up on Capitol Hill. So, Kevin, we spent a lot of time on the national elections, but let's talk about Mississippi. Let's talk about Kentucky and why those appear to be so important to the president, so he actually traveled there.
Bellwether. Just under a year until the presidential election, two gubernatorial races have captured the attention of political scientists around the country. Why? That open seat in the state of Mississippi. And that potentially could be a bellwether of sorts, as it's really been offered an opportunity for Democrats to score potentially a political win there. Then if you head over to Kentucky, where President Trump rallied last night at a Make America Great Again campaign-style rally, Governor Bevins is in really a close race, closer than Republicans would like to note. But I will say this. I spoke with a prominent Republican strategist just within the last day or so who explained it this way. The fact that President Trump was in Kentucky campaigning shows that in these more conservative-leaning states, the president, while not nationally popular, is still deeply popular in conservative states and viewed as a political asset on the campaign trail.
And the Republicans still have a commanding, I think I can say, lead in the state houses across the country. But the Democrats appear to be eroding that a bit. And that might be important because 2020 is not just a year of presidential election, it's also a census, and we know what that means.
Yes, absolutely. And of course, the census going to be crucial in terms of redistricting lines and allocations for funding for a host of different programs. Now, beyond that, I would note, if you look at the New York Times Siena poll that came out within the last day or so, it shows that President Trump, while not popular nationwide, is much more competitive in head-to-head 2020 matchups in some battleground states like Michigan, Pennsylvania, Wisconsin, and Florida.
Okay,
David?
Many thanks to Kevin Cirilli reporting from Capitol Hill today. And now let's go to Jesse Westbrook, also down in Washington, with this decision out of SEC basically to kick the can down the road by 3 years on MiFID.
Yeah, I mean, so basically, for those who are not very familiar with MiFID, it's hugely important to Wall Street. It is a European rule that banned brokerage firms from splitting out the cost of everything that they do, trading services, from research services, and this is a huge existential threat to the analysis business, stock analysis, bond analysis that we know so well from Wall Street. The oddity of this is that the SEC rules, U.S. rules, are in conflict with the European rules. So the SEC had given the industry this 3-year reprieve to 2020. It's now going to be kicked out 3 more years to 2023. So Wall Street has 3 more years to not have to worry about all the headaches that MiFID might cause on this side of the Atlantic.
Yeah, to be clear, as I understand it, what Europe is sort of saying is you have to get it a la carte. You can't get it table d'oeuvre. You got to break this thing out. But in the U.S., we have a rule, as I understand it, the SEC says, if you start selling research separately, you got to register, and that's a real encumbrance. What is the way around that?
Well, the SEC is going to have to figure that out. The rules you're talking about is there's two sets of regulations with the SEC. They regulate brokers a certain way, and they regulate investment advisors, big fund managers, firms like BlackRock, Fidelity, Vanguard. They're regulated a different way, more aggressively most of the time. And oddly, if you start selling research a la carte, as you mentioned, you then, under SEC rules, you're an investment advisor. They deem you an investment advisor. Now, no broker wants to be deemed an investment advisor, so that's the whole conundrum with the European rules. I guess the SEC, it's so complicated that they need 3 more years to figure out a solution.
Yeah, maybe it'll look better in 3 years from now. Okay, many thanks to Jesse Westbrook reporting from Washington. And now let's get a check on how markets are reacting to today's top stories. Joining us now is Abigail Doolittle. So at first I thought the markets went up because of the trade news, and then they seem to be a bit more mixed.
Yeah, they're moving around at this point, very small moves, mixed moves, but record highs once again. So a bit of the trade news, the possibility of rolling back the September 1st tariffs, the possibility that those December 15th tariffs don't go into play. The earnings season, there's some misses today, or some perceived misses, one of those being Uber. There was just a redhead going across the Bloomberg minutes ago, down 9%, session lows, record intraday low. And it's interesting, they put up a good quarter and they put up a bad quarter, but investors there are focusing on the bad. That is a sign of the times for sure.
Well, also Uber, I mean, actually they're getting toward profitability maybe a little faster than we thought, but they had said, boy, we're going to be great on delivering food, and now maybe it's not quite as great as we thought it was.
Yeah, and it tells you that investors want it all, because here we are in this big rally year, the S&P 500 up 23%, on pace for the best year since 2013. It looks like we're going to have a nice end-of-year rally, but we're seeing this rotation into value out of growth. So Uber, clearly one of these high-momentum growth stocks. So the fact that they weren't able to hit all of the metrics, investors selling those shares, you know what? A sector's doing very well, and you look a little skeptical around this,
well,
and I understand it.
Only because I've heard about this rotation, back into value out of growth. Yeah. I've heard about it for months and months and months. Because it's coming, never quite gets here.
Well, a piece of it is here right now, actually, because the energy sector now up 3 days in a row. Over that time period, up 6%, the best 3 days going back to 2016. And a piece of this, David, it's not just going into value out of growth, it's catch-up potential, because on the year, the S&P 500 up more than 20%, energy up just 6%. So if the rally does continue, investors want to go into those sectors, those stocks that haven't done quite as well, perhaps considered to be low-hanging fruit here. Let's see whether or not it continues.
Always looking for bargains, right?
Yes,
Always
indeed.
looking for bargains. Okay, many thanks to Abigail Doolittle. We turn now to Mark Crumpton for Bloomberg First Word News.
David, Bloomberg has learned Beijing wants the U.S. to roll back U.S. tariffs on as much as $360 billion worth of Chinese imports. This to sign an interim trade deal with the U.S. In return, China could remove tariffs on U.S. goods, mostly farm products. This month, both sides hope to wrap up a deal. China and the U.S. plan to highlight joint efforts to crack down on fentanyl smuggling. President Trump and Chinese President Xi Jinping want to help alleviate the opioid problem. This is part of the larger trade talks. Washington has criticized Beijing for not doing enough to curb the flow of fentanyl. Opioids are blamed for thousands of deaths in the United States. Today, more transcripts are due out from the House impeachment inquiry. Among them, the deposition of former Special Envoy for Ukraine, Kurt Volker. We're also expecting to get the transcript from the hearing with Gordon Sondland, U.S. Ambassador to the European Union. House Democrats say in the coming days, more will be released. With the UK entering another election campaign, there's one thing Prime Minister Boris Johnson can count on. That's the support of hedge funds. In a little over a year, Johnson raised more than $516,000 from hedge fund executives, investors, and bankers. In June, the Prime Minister's supporters held a secret fundraiser to tap prominent fund managers. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks very much, Mark. Coming up, the price tag for Medicare for All. Elizabeth Warren finally says how she will pay for her plan without taxes going up for the middle class. But do the numbers really add up? We're going to talk about that next. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and on radio. I'm David Westin. Inch by inch, the U.S. and China appear to be working their way toward a so-called first phase trade deal, with reporting out overnight that the agreement may even go so far as to roll back some existing tariffs. Lanhee Chen was Mitt Romney's chief policy advisor during his 2012 presidential campaign, and he's now a fellow at the Hoover Institution as well as director of domestic policy studies and public policy at Stanford. He joins us today from Mountain View, California. Welcome back, Lanhee. Great to have you here. So let's talk about this trade development. We've talked about the phase one. If, in fact, it does go so far as to roll back perhaps the September 1 tariffs that were imposed September 1, how significant could that be as we look at trade deficit numbers right now that show a drop-off in trade with China?
Yeah, clearly what we've seen particularly is a decrease in U.S. exports. Obviously, a lessening of tariffs would be of benefit to both China and the United States. And if we zoom out, David, and think about the bigger picture here, really for President Trump, this phase one agreement, the more they can get in there on the balance of trade issue, on some of this low-hanging fruit, the better off it's going to be, A, because it gives him a political win, also gives Xi Jinping a political win, but defers the likelihood that we need to see any further conversation, frankly, before next year's election. So I think the reason you're seeing this optimism is because people realize these were the issues that President Trump wanted out of this deal. It seems like these are the issues that are being resolved. And in that sense, I think investors and others should be buoyed by the news.
So Lanhee, we don't know what's in the so-called phase one deal, and we certainly don't know if it even will be executed. But from what we know and understand, if that deal got done, would we be farther ahead compared to China than where we were when we started? That is, some of this is to get some agricultural products being bought that actually they were being bought and we lost them.
Yeah, some people have described this as sort of a resolution to a problem of the president's own making, and I think there might be some truth to that. But look, I think in the long run, anytime the United States and China can reach some kind of an agreement on issues relating to trade, relating to the balance of trade, I think we have to celebrate that as a win. Now, there's no question that some of this is just a lot of noise and energy that's been created since the president took office. So it's very, very difficult to tell exactly whether we come out ahead or in the same place until we see the details of this phase one agreement.
So turning now, one place where there doesn't seem to be much agreement right now is among some of the Democrats running for president about how to approach health care. I mean, there's been a lot of division, actually, among those candidates. And as you know, we talked to Speaker Pelosi, House Speaker Pelosi, on Friday, and she specifically said she was not particularly a fan of Medicare for All. This is part of what she said.
I'm not a big fan of Medicare for All. I mean, I welcome the debate. I think that we should have health care for all. I think that the Affordable Care Benefit is better than the Medicare benefit.
So just about the time Speaker Pelosi was talking, we also had Elizabeth Warren, the candidate for president, come out and say, okay, this is my plan, this is how much it will cost to have Medicare for all, and this is how I'm paying for it. Does it make sense? Does it add up?
Well, it doesn't make sense for a number of different reasons. I mean, we can start with her incredibly optimistic assumptions about how little Medicare for All would cost. In many situations, estimates suggest that she might be as much as $10 trillion to $15 trillion off in the cost. And then when you think about the financing mechanisms, that's really when things fall apart. She talks about, for example, immigration reform being one of the things that could help pay for this, a tax on employers, which clearly would be passed through to middle-income workers. There's all sorts of things about her plan that don't add up. And I think Speaker Pelosi's interview was very interesting in the sense that she understands the political dynamic here, the difficulty that the Democratic Party is going to get into if they nominate Elizabeth Warren, and someone like Elizabeth Warren with those proposals is a huge liability for Democrats going into the general election.
Yeah, we're talking with Lanhee Chen of the Hoover Institution. Right now we're talking about Medicare for All and the Democrats' plans on health care. So when we talk about the political calculus of practical matter, if you look at Elizabeth Warren's plan, it looks like some of the way she pays for it is actually by reducing the cost. That is what is paid to prescription drug companies as well as insurance companies. We've seen that in Washington before. There's a lot of resistance from the lobby.
Well, this is exactly right. If you look historically at entitlement programs like Medicare, one of the big disputes, David, has always been how much to pay providers. And there was actually a mechanism in place that Congress passed in the early 2000s that would have automatically cut, for example, physician reimbursements. And every single year, Congress would vote essentially to nullify those decreases. So there's no reason to believe that political pressure would not again result in Congress wanting to hike reimbursements to hospitals, to doctors, because the reality is, if you put Elizabeth Warren's plan into effect, you're going to put out of business a number of rural hospitals, you're going to drive a number of physicians away from the practice of medicine, and destroy the U.S. healthcare system. This is not a hyperbole. This is serious challenge that's created by a plan that requires low reimbursement rates, which is precisely what Elizabeth Warren's plan calls for.
Once again, we're talking with Lanhee Chen of the Hoover Institution. So, Lanhee, you also heard the speaker say that she wants health care for all, not Medicare for all. If you look at, for example, an alternative such as Vice President Joe Biden's plan, does it come close to that?
Well, you know, some of the details are still missing. I think what Joe Biden and Pete Buttigieg and others are proposing essentially is a public option, some form of a public plan that people could enroll in as an alternative to private plans. The challenge with that, of course, is that public option also will end up being quite costly. But beyond that, if you have a successful public option, what you actually have is some variant of Medicare for all, because people are going to move from private coverage into public coverage. That's going to create challenges in private marketplaces. And then the question becomes, of course, how do you pay for it? So in many ways, a lot of these conversations, whether it's Medicare for all, or as Pete Buttigieg calls it, Medicare for all who want it, end up in roughly the same place.
So, Lanhee, finally, we have various plans, or at least parts of plans from the Democratic candidates. Do we have a plan out of President Trump? I mean, what are they running against when it comes to health care?
Well, I think President Trump is going to amplify sort of his record and what he's done, which is to expand some choice on the Affordable Care Act marketplaces and off those marketplaces. He's done some things to cut regulation, to try and address costs, to give states more flexibility. I think the president's largely going to run on that record. But remember, once we get into this campaign cycle next year, it's really going to be less about the policy specifics and more about the grand vision. And so the question will be, if the Democrats nominate someone who is for a takeover of the healthcare system by the federal government, how will that compare to whatever vision President Trump has out there, which is much more private sector oriented?
Okay, thank you so much, Lanhee. Always great to have you with us. As Lanhee Chen of the Hoover Institution out in California. Still ahead, we hear from Goldman Sachs CEO David Solomon, his thoughts on trade, the global economy, and the 2020 election. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and on radio. I'm David Westin. Goldman Sachs Chairman and CEO David Solomon sat down with our colleague Matt Miller, and they talked about, among other things, where Solomon sees the U.S.-China trade deal.
If you're watching what's coming out of the administration in Washington, if you're listening to what's coming out of China, I think it feels like both are incentivized to have some sort of a phase one deal. So there looks like there's some progress and some moving forward. I think the issues are complicated, and there'll be a lot more to talk about, but I'm relatively optimistic based on the data points. I'm watching them just as you are. It feels like we're going to have something constructive happen.
How much damage do you think has been done, though, and can that be reversed? Can the economy be salvaged from trade?
Well, first of all, the global economy is still growing, and it's chugging along. I think the trajectory of growth has slowed over the course of the last 12 months. But what the trade tension has done is the trade tension has acted as a headwind to growth. And so if you remove that headwind, that should be a positive for the momentum of growth in the economy in the short term.
It's not the only uncertainty, obviously, facing
there are quite
investors.
A few.
Well, in the U.S., I think it's more and more the political situation has been uncertain. The Democrats are moving towards an impeachment. You've got some very progressive candidates on the Democrat side for 2020. How much of a concern is, first of all, impeachment for you? Well, for businesses in the U.S.
Look, I think that process, the process of impeachment and how it plays out, to the degree that there was an impeachment hearing and the President of the United States was removed from office, that would obviously be a very, very significant event. I don't see that as something that's likely. So at the moment, I think we're in a political process where there's a lot of discussion about this. I think the bigger thing that markets are focused on is not the impeachment process in the U.S., but more what's happening in the election. And I think it's very early to really predict and call, but we're watching the election like everybody else, and it's going to be an interesting process in the next 6 to 9 months as the candidates take shape, and we see what I think will be a pretty interesting election in the United States.
That was Goldman Sachs Chairman and CEO David Solomon speaking in an exclusive interview with Bloomberg Television. It's time now for the stock of the hour. Boeing is the best performer in the Dow today, rallying about 2% on news that CEO Dennis Muhlenberg will forego his bonus until the 737 MAX is flying again. Katie Lyons is here with more. That might be a long time.
Well, it might be a long time. He's at least foregoing it for 2019. He's also declining any equity grants until the fleet is in the air in its entirety. This is coming from David Calhoun, who's the chairman of Boeing. He was speaking on CNBC earlier. Of course, Muhlenberg used to be the chairman. He was stripped of that role earlier this fall and amid all of this controversy and fallout from the 737 MAX crashes. Now, he's still the CEO. Calhoun says the company's still behind him. But as we know, Muhlenberg has been under a lot of pressure, especially in the last week. He faced 2 days of grilling on Capitol Hill. And in addition to questions about safety, the company's role, what it did and didn't do correctly, he also was really grilled on the compensation issue. Regulators, families of the victims, really taking aim at him for that. I mean, this guy made $23 million last year. $20 million of that was in cash bonuses and equity. So he could potentially be taking a double-digit million-dollar hit here by doing this. He's taking pretty swift action, at least to address those concerns. But of course, there's a lot more.
So take Capitol Hill first. Is this going to help him up on Capitol Hill to say, I didn't get my bonus, or at least I don't have it yet?
I mean, maybe, but obviously the concerns around him, his role, and Boeing broadly, its reputation, go far deeper than just this compensation issue when we talk about concerns about safety, et cetera. And actually, two legislators just last night, Representatives Peter DeFazio and Rick Larson, put out a letter to lawmakers saying we didn't get enough from him. He didn't answer all of our questions, still kind of continuing this culture of opaqueness, they called it, basically said that there's still a long way to go in this investigation of the company. And put that aside, you still have to get the FAA getting the planes back in the air. And Calhoun, Muhlenberg has said that'll happen by year end, but that's also still an open question.
Well, and as you've pointed out, it's not just the FAA. We've got regulators around the world that are going to have to clear this, and a lot of those regulations internationally are saying we're not sure, we're just going to go along with the FAA.
Yeah, the process in Europe, for example, and elsewhere is going a lot more slowly than here at the FAA. So there's still a lot of hurdles for Boeing to climb here. And it's also not just getting regulatory approval, getting the airplanes back in the air. In terms of reputation management for this company, you have to get travelers willing to get back on that airplane. And you have airlines saying they're going to give customers a choice, tell them what plane they're on, move them if they don't want to be on this jet. So there's a lot of, ripple effects that go on.
Just to close us out with the investors, because the stock is up today, how much of that is because of what you suggested? We have a new sheriff in town and a chairman,
right,
and maybe the board is asserting itself with respect to Mr. Muhlenberg more than it has in the past.
Well, that probably is partially true. Now, I think there may be some optimism on the second part of his commentary, which was that he still thinks Muhlenberg is the best man for the job in getting this jet back in the air. So maybe that suggestion of continuity of leadership at the company may be fueling a little bit of optimism here.
Fascinating. Okay, thank you so much to Katie Lyons for that report on Boeing. Up next, making antitrust great again. It's not just the niche legal circles anymore. Trust busting has gone mainstream, with both sides targeting big tech. We're going to talk about a fundamentally different approach to economic regulation. That's next. This is Balance of Power on Bloomberg Television and on Bloomberg Radio. From New York, this is Balance of Power on Bloomberg Television and Radio. I'm David Westin. From Bloomberg First Word News, we go now to Mark Crumpton.
David, OPEC sees its market share shrinking for years to come. The cartel expects that demand for oil will fall by about 7% over the next 4 years. OPEC says the big reason is the flood of U.S. shale oil supplies that could lead the group and its allies to cut production even further. Former UK Chancellor of the Exchequer, Philip Hammond, has announced he's quitting Parliament. Hammond was expelled from the Conservative Party for opposing Boris Johnson's Brexit strategy after serving in former Prime Minister Theresa May's cabinet for 3 years. In a letter to constituents posted on Twitter, Hammond said he would not run in the December election as an independent and that the situation left him, quote, saddened. In Nigeria, firefighters are battling two fires that broke out at a busy market that happened in central Lagos, the country's largest city and commercial center. It's unclear if anyone has been hurt. Residents threw whatever belongings they could from the buildings. In northern Mexico, 9 members of a local family of American Mormons were killed in an ambush. It took place as they traveled between the states of Sonora and Chihuahua. The attackers were believed to have been members of organized crime. 6 of the victims were children. The family has lived in a fundamentalist Mormon community in Mexico for decades. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks very much, Mark. Not many people will remember Wright Patman, the Texas congressman who served in the House of Representatives for nearly a half a century. But one student of economic regulation in Washington has studied how we've dealt with economic power since the 19th century and concluded that Patman's approach may be the key, or at least part of the key, to how we go forward with things like breaking up big tech. Matt Stoller served as a senior policy advisor and the budget analyst to the Senate Budget Committee, and he is now a fellow at the Open Markets Institute. He's also the author of Goliath, the 100-year war between monopoly power and democracy. And we welcome Matt Stoller now to Bloomberg. Welcome, Matt. Good to have you here.
Thanks for having me.
So give us in a brief compass exactly what the problem is you're identifying, because you clearly think there's a crisis in America today. What is it?
Right. So I wrote Goliath. It's a history book, but it's contextualized around today's monopoly crisis. So if you look at around the economy today, in big markets like search and social and airlines and cable companies, you see monopolies or oligopolies, but you also see it in small markets, everything from peanut butter to coffins to missiles and munitions sold to the Pentagon. And this has a number of consequences. It increases inequality, it reduces business formation, it slows productivity growth, it corrupts our politics. And so you're seeing a kind of political reaction to that. In Goliath, I trace this problem, and I show that we've had this problem before in the late 19th, early 20th century, and then over a series of political battles taking a few decades, we were able to address this monopoly problem and restore open and competitive markets. And then in the second half of the 20th century, we allowed these robber barons to come back because of some intellectual changes from the 1950s to the 1970s. And you roll that forward from the late 1970s until today, where you enable concentration and you have a world that's dominated by monopolies.
And as I mentioned, you really focus in part on Wright Patman.
That's right.
And I basically knew him just from the Robinson-Patman Act. I didn't know much more than that, which is a price discrimination bar that was enacted. Why do you think his approach makes sense today?
Well, so Patman was he was a foe of monopolists and a foe of concentrated financial power, and he was an anti-fascist. And so he was in Congress between 1929 and 1976, and he came from a poor area it was Texarkana in northeast Texas. And what he saw was wealth being stripped from his community and more autocratic forms of politics happening in the 1920s because of robber barons who were controlling our politics, controlling our markets, and imposing their way of doing things on us. It was sort of a dark decade when democracy was a lot of people were disillusioned, didn't believe democracy could work. And over the course of the next 4.5 decades when he was in Congress, he fought to constrain concentrated financial power and open our markets so that people could freely trade goods and services with one another without a third-party dominant intermediary, either government or monopolies, kind of bossing people around. And that was his politics. He learned it from Louis Brandeis, and he learned it from a set of populist farmers and merchants in the late 19th century. And that's the kind of politics that we're actually kind of returning to right now.
In your analysis, we're talking with Matt Stoller, the author of Goliath, a fascinating book about monopoly.
Right.
In your analysis, is big necessarily bad? Because a central tenet in recent years, at least, of antitrust law is bigness is not equal to badness. It can be bad, but it can be not bad as well. Do you think bigness is inherently bad?
Yes, generally bigness is bad. And take an example like Boeing. Okay, so you can look at Boeing in many different ways, but the reality is Boeing is a mess because in the 1990s they bought McDonnell Douglas and rolled up the entire civilian aerospace sector into one company, which pooled expertise and also pooled risk. Then it got corrupted. In the late 1990s, you saw the 787 Dreamliner and a whole bunch of problems that culminated in the 737 MAX, a lot of bad defense contracts. And now our entire civilian aerospace industry in the United States is in crisis because we have pooled risk. So what you find, and that's true with the banking system, it's true with the pharmaceutical industry, it's true across the board, we have pooled risk in extraordinarily dangerous ways, and not really because there are any economies of scale there.
Do you see any instances where economies of scope and scale actually benefit the republic overall and consumers overall? Because that has been part of the theory that sometimes you can be more efficient, you can reduce prices, you can have better services delivered. Do you think that ever happens, that economies of scope and scale are good?
Absolutely. You can't have family-owned steel or family-run steel mills, right? You can't have, in a lot of industries you need some technical expertise, scientific and engineering expertise. There are networking industries, telecommunications, airlines, social networking, there's a lot of different networking. The post office, where you do need economies of scale, or there are network effects, and there are ways of addressing that and making sure that those platforms are neutral, so nobody can use those to manipulate other people or dominate or pick winners and losers. Because what happens when you have a large, scalable platform that is unregulated and privately owned is you get a private government. And Mark Zuckerberg's actually said that Facebook is more like a government than a business. So what's actually happening in our culture right now is not business, but across all of these different markets, you have these private governing forces who are making political choices about the markets in which we interact. And that's a political crisis. It's not just an economic crisis.
Yeah, it's important that your book is not just about economics. It's also about politics, essentially. So many thanks now to Matt Stoller. He is the author of Goliath, the 100-year war between monopoly power and democracy. It is a fascinating and provocative thesis, I'll tell you. Just weeks ago, regulators approved T-Mobile's bid for Sprint. Despite the step forward, the deal still almost has to clear some state litigation hurdles, contending that the merger will harm consumers. Bloomberg News' Sherry An spoke with FCC Chairman Ajit Pai on the deal.
Certainly, I would hope that those states would recognize what the FCC has recognized, what many people have recognized, that the consummation of this transaction would be in the public interest. One of the commitments I got from the companies and that the companies agreed to was to deploy 5G to 99% of the American population within 6 years. 50 megabit per second service or greater to 99% of Americans. That's a huge public interest benefit. More in-home fixed broadband competition, price commitment. These are the kinds of things that are going to be consistent with the public interest.
The argument, though, is that that would have happened anyways because T-Mobile and Sprint had committed to the deployment of 5G anyways.
That's not the case when you look at the spectrum assets alone. For example, T-Mobile has a very good position in low-band spectrum and high-band spectrum, but it doesn't have mid-band spectrum assets. Sprint has good mid-band spectrum assets, but not necessarily strong low or high-band assets. For 5G, you need a mix of all three, low, mid, and high. And we think that that newly capitalized company, once it's together, will be a greater competitor. And especially when you're talking about an industry where, by some estimates, the two largest competitors have 93% of the free cash flow. We want to turbocharge a third competitor to compete with them, and we believe this transaction will do that.
When would this happen? It's been 18 months. When do you expect it to happen when even that hearing by the state's lawsuit hasn't happened?
I can't forecast what litigation is going to, how the litigation is going to turn out. That, of course, depends on the state AG lawsuit here in New York. From our perspective, at least, we want to make sure that the public is able to benefit from some of these commitments we've gotten from the parties that will deliver faster, better internet access services when it comes to wireless well into the future.
You've also spoken extensively about big tech, regulating them, the freedom of speech as well. Especially when it comes to companies being able to block some content that they don't want to see. What are your thoughts about Twitter now banning political ads and Facebook not doing so?
So we don't regulate content companies like that. We don't discuss the content decisions that they make. What I will say is that we've consistently said, and I personally have said, that it's important to have transparency across the entire internet economy. Tell the American consumer, tell the American government how you're making some of these decisions, and I think that will give people better insight into why you're making some of these decisions.
That was FCC Chairman Ajit Pai speaking with Bloomberg's Sherry An. Coming up here, President Trump has fundamentally changed the U.S. approach to the Middle East. We talk with Martin Indyk, former U.S. ambassador to Israel, about how it's working or not working. That's coming up next. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. Martin Indyk has had a distinguished career as a U.S. diplomat, serving twice as U.S. ambassador to Israel, as Assistant Secretary of State for Near East Affairs, and as Special Envoy for Israeli-Palestinian negotiations. He is now a distinguished fellow at the Council on Foreign Relations, and we welcome him now back to Bloomberg for today's Conversation in Chief. So, Mr. Ambassador, thank you for being here.
Thank you, David.
You have a fascinating piece in Foreign Affairs, sort of summarizing the President Trump's policy in the Middle East and how he's fundamentally tried to redo U.S. policy. Let's talk about that because it particularly focuses on Israel and on Saudi Arabia and our relations. Start first with Israel.
So I think the overriding point that's important to understand that has been driven home by his recent decision in Syria is that President Trump intends to retrench from the Middle East, to essentially disengage from the region as best he can. And to do this, he is subcontracting to Israel and Saudi Arabia. and trying to get them to take on the responsibilities the United States has traditionally done for the last 40 years. And that doesn't work very well. Israel is certainly a strong power in the region, probably the strongest. But there's a glass ceiling on how much it can work with the Sunni Arab leaders because of failure to make progress on the Palestinian issue. And so they're happy to have covert relations, but there's a limit to how far they're prepared to go. In Syria, Israel has depended on the United States to try to help it in what is becoming a hot war with Iran. And Trump's withdrawal from Syria has really created a problem for Israel in terms of its ability to influence events there. Saudi Arabia, with its war in Yemen, the murder of Khashoggi, and the way in which the Crown Prince is basically running a policy that's aggressive and I think brash and not thought out, is getting the United States into all sorts of difficulties in the region. Rather than advancing our interests, it's actually causing detriment to our interests.
Well, in Israel, part of the theory seemed to be that President Trump would help his friend Bibi Netanyahu out, and then he would win his election and he'd be prime minister. That hasn't worked out quite the way it had planned, even though the president of the United States gave up things like conceding dominion over the Golan Heights, something the United States had very specifically not done for many years. What's going on in Israel with their government?
Well, Trump intervened heavily on behalf of Netanyahu, as you say, in two elections because they had a redo election, and it didn't work. In both occasions, Netanyahu was unable to form a government, is unable to form a government. So I think that Trump feels that he's backed a loser there, which he doesn't like to do. On top of that, there's tension over Syria, as I explained. They don't agree on Syria. And there's also tension over Iran, because Netanyahu wants a robust American policy of confrontation with Iran, and the president has drawn back from that, specifically abilited retaliating for this egregious Iranian attack on the Saudi oil fields. And that has sent a signal that the president is not interested in confrontation with Iran. And so that tension has led to an estrangement, I would say, between Netanyahu and Trump. He didn't call him on his 70th birthday. They haven't talked for a long time now. And that, I think, underscores the way in which U.S. retrenchment is really straining our traditional relationships with our allies in the region.
We're talking with Martin Indyk, former U.S. ambassador to Israel, among other distinguished positions. Talk about Israel and Syria particularly, because as you reported, at one point it was thought Bibi Netanyahu thought he could go to Moscow and get his friend Vladimir Putin to sort of help him out in Syria. That didn't work out very well either.
No, because notwithstanding a determined effort by Netanyahu, I think he's made more than 6 trips to see Putin and kiss the ring. Putin's interests are with Iran when it comes to Syria, because he depends on Iran for the ground troops that are bolstering his client, Bashar al-Assad, the Syrian regime. So they are aligned in supporting Assad and his reconquering of Syria. Netanyahu wants a free hand to take care of the Iranian threat that they're posing in Syria to Israel. And Putin is prepared to give him that, but he's not prepared to go one step further, which Netanyahu is pushing him to do, which is to use Russia's influence to push Iran out of Syria. And because there's a limit to how far Russia is prepared to go, Netanyahu cannot achieve his objectives in Syria.
So let's turn to Saudi Arabia for a moment. As you said, there's a limit on how much Israel can do in the region because of the Palestinian issue. It appeared at one point that perhaps the White House, particularly Jared Kushner, the son of the president, thought maybe he had an understanding with Mohammed bin Salman, the crown prince, to say, we'll take care of the Palestinian problem. Once again, that does not seem to have played out.
Right. So what happened was that President wanted to move the U.S. embassy to Jerusalem and recognize Jerusalem as Israel's capital. Kushner went to see Mohammed bin Salman, who apparently told him it'll be okay, things will calm down, kind of gave him the green light, which gave Trump the green light to go ahead and do it. If it wasn't going to offend the Saudis, then the other Arabs would come along. But it turns out that it may not have offended the crown prince, but it mightily offended the king. And he's still the king. and he still cares about Jerusalem. And he has come out repeatedly condemning Trump's decision and making clear that Saudi Arabia will not support anything short of an independent Palestinian state with East Jerusalem as its capital, which is not part of Kushner's peace plan at all. So that as a result of that, Kushner's move in recognizing Jerusalem as Israel's capital not only forced Palestinians out of the negotiations, so they can't accept it. They're not. The United States is no longer an honest broker, but it also forced the Saudis out. And without that, they don't have the Arabs. And if you can't make peace, if you don't have an Arab interlocutor.
We are talking once again with Martin Indyk, former U.S. ambassador to Israel. Diplomacy, as I understand it, you know it far, far better than I do, fundamentally comes down to interests, an alignment of interests. To what extent does the United States have an alignment, at least a partial alignment of interest with Saudi Arabia? Because sometimes the president talks, and perhaps even Jared Kushner talks like, oh, we're friends, and that will take care of it. And who was it that famously said there are no such things as permanent friends, only permanent interests?
Right. So we still have an interest in Saudi Arabia. But I think that it's important to understand that the interests have changed, and Trump is reflecting this. It used to be a vital strategic interest of the United States. And we went to war twice in Iraq, you could say, because of the threat to Saudi Arabia and the free flow of oil at reasonable prices. Now that we're an exporter of oil, now that we have fracking and production of natural gas in the United States, our dependence on Saudi Arabia is much less. That's not to say that the world economy isn't dependent on Saudi Arabia as the largest oil producer, and that our major trading partners aren't dependent on it. So we still have an interest, a strategic interest, in Saudi Arabia. But it's not vital. And that means Trump is essentially right when he says we don't need to go to war for that oil. And that's a fundamental difference. Plus, you have the war weariness of the American people after more than a decade of wars in which there's nothing to show for it in Iraq and Afghanistan, with a huge sacrifice of blood and treasure. And so I think the combination leads to this retrenchment, which started under Obama, but which Trump has given a turbo boost to. And the problem with that is that it leaves a vacuum. And that vacuum is filled by the Russians, the Turks, the Iranians. And Israel and Saudi Arabia will try, but without the United States supporting them more overtly and effectively, it's going to be very hard for them to fill the vacuum.
Okay, many thanks to Ambassador Martin Indyk of the Council on Foreign Relations, and we're going to have more with Ambassador Indyk coming up on our second hour of Balance of Power on Bloomberg Radio. We're going to talk about the Iranians. Live from New York, this is Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. Reports are that the FDA is about to impose a new ban on sale of flavored vaping products. To take us through the what and the why, we welcome now Drew Armstrong, who oversees our healthcare coverage here at Bloomberg. Welcome, Drew. Great to have you here.
Yeah.
So what do we think the FDA is about to do?
So we know that the FDA has been looking at a ban on flavors in vaping products. And the thing that was talked about earlier at the White House by Health and Human Services Secretary Alex Azar was that they were going to ban everything but tobacco. That would have meant mint and menthol off the market. Now, there's been a lot of pushback over that, saying that if you do this, people are just going to go back to regular cigarettes, or you're not going to provide smokers with an ability to quit, and pushing to leave mint and menthol on there. Now, the debate here is, hey, we've seen some new data that has shown that young kids, like high school, middle school, like the mint flavors, and the worry is that if you leave these flavors on, that they will still be attractive to children. And so, there's a huge debate about how far does this ban go? Which flavors do they actually ban? You've seen huge pushback right now from the vaping industry, which says this regulation will, this guidance will destroy jobs, and public health folks on the other side saying we've got to do this to protect teenagers.
What would it mean if they went forward with the ban? Let's assume they allow menthol and tobacco, but nothing else. What would it do, we think, to the vaping industry? Because you've seen some companies grow up and really add a lot of market value.
You know, I think to understand the vaping market, you really have to acknowledge the fact that on one hand, you've got some really big companies like Juul that sell their products in convenience stores. They have a big online market for products like this, kind of self-contained vaping systems. And then separate from that, you have a independent vaping market. People you see walking around these kind of big clunky devices on the street. Those are more custom vaping things, and people mix flavors in these vape shops. This is a very different market. It's a small business market. It allows more interchangeability of flavors. Those are two really separate businesses, and I think the smaller guys who say we're independent proprietors, we're vaping businesses that are around the corner from your office, we're going to get crushed by this if we can't give people what they want.
And what is the fundamental health risk that the FDA would be addressing?
Well, I mean, the worry here is that these products, in particular Juul, to be clear, which is the most popular product by a wide margin among young users, have created a whole new generation of nicotine addicts. I think the jury is still out on whether or not these things are safer than cigarettes. That is unknown, but we do know that cigarettes are very, very bad for people, kills 400,000 people a year. And an alternative to that would be very desirable for existing adult smokers. What you don't want to do is get a whole bunch of people hooked on nicotine who'd never been exposed to it before. That is a public health crisis of its own.
Okay, we'll keep watching to see what the FDA actually does. Thank you so much to Drew Armstrong, who covers our healthcare practice here at Bloomberg. Coming up on Balance of Power, it continues on Bloomberg Radio. In our second hour, we're going to get more with former U.S. Ambassador Israel Martin Indyk. Lanhee Chen, he is former federal prosecutor, joins us to discuss the latest in impeachment. Live from New York, this is Balance of Power, and we are on Bloomberg Television, and we are on Bloomberg Radio.